If you're looking for a great way to invest for the long term and watch your money grow, especially if you are in Nigeria but want to invest in dollar assets, this is for you. Hi, my name is Gift Onyika, your financial bestie, and in this video, I'm going to be explaining to you how to use ETFs and index funds to build wealth, and also, especially if you're looking at long-term investment that will preserve your money, the value of your money, because this is a dollar asset, so you get to invest in a dollar asset, and you definitely know that our country currency plus the dollar, you already know the one which is going to give you more returns, right? So these systems are just like those low risk investments that we talked about that the governments in Nigeria do, from treasury bills, mutual funds, commercial papers, and likes like that. Now we're talking about how you can invest in the global markets, not just investing in your local currency. So if you're in Ghana, Nigeria, wherever you are in the African continent, this is a great way for you to start investing in dollar assets. So let's get right into it. I'm going to make this as simple as possible, and also something you can start immediately we are done from this class. So let's get into it. So let's explain what is called ETFs. Like most people hear ETFs, ETFs, ETFs. So ETFs are exchange traded funds operated by investment houses. Now, there's a whole lot of similarities, right, between ETFs and index fund. They are most likely the same, just a little differences. Sometimes the fees um is what differentiates it. So, I'm going to, because I want you to understand this in a layman's term, because people easily understand stock market, but I think there's this misconception about ETFs, and people just want to stay away from it because they don't really get much about it. So that's why I'm going to try as much as possible to explain to you what ETFs are. So let's take for instance that is a woman's world, right? We all know that women are into their skincare routine, anything that will make their skin glow, be youthful, and glowy. So that's why we want to use um, the women's word. Usually, as a woman, if you want to get skincare, there's just always this struggle to get the right product, the right retinol, the right cleanser, the right vitamin serum, the right moisturizer, and all of that. So you could go from one store to another. You could walk, check out all of these things because one influencer is trying to sell their market, so they tell you that this is the best they've used so far, and you go try it on, and it doesn't just work for you, and you go again, another influencer is saying another thing, you go buy that one, and it gets worsened because your face is not glowing like what you're seeing on the television or the influencer that you're seeing on social media. But let's take, for instance, that a pharmaceutical store or dermatology company decides to package this skincare, right, that suits different skin type into one pack. So if you buy a pack of it, right, you get the right retinol, you get the right cleanser, you get the right vitamin serum, you get the right moisturizer, all packed in one pack. So let's call it your skincare kit. Yes, your skincare kit, not skit. Kit, right? So you just go to the store. It eases you the stress of going to pick here, going to one particular store and they say they don't have this one. You go to you drive to another place. So, but just one grab, you have all your skincare in one pack. That is what ETF does for you in the stock market, which is a brilliant idea, right? It saves you from the whole trying to know what stocks to pick, what stocks is doing well, what stocks not to pick. A particular company, an investment company, has done that already for you. They've picked the best performing stocks in tech, the best performing stocks in the US stock markets, the 5,000 companies that are best performing in the US market. Another one has picked all of the companies that are best performing in the stock market and they are trading it, and it's called exchange traded funds. Clap for me. See, when it comes to investment, there's no need complicating things, making it so difficult for people to understand, right? All we want to do is for you to be able to understand this thing and just go and start investing right away. And with this explanation, it becomes simple now. You know that you are not, you necessarily don't need to bug your head, stress yourself to go find the stocks to pick and what not stocks to pick. You just go straight to the point, especially if you implement what we call the time horizon when trying to pick make an investment, right? So you know that you are 30, 35 years and you don't have time, you're so busy, but you want to invest. This is a great asset for you to invest in. You're not chasing what stocks is good, what stocks is dropping. So in this basket of fund of stocks, right? When a particular stock is not doing so well, others will be doing well. So it does not automatically drag you down because you have different stocks in your basket, in your portfolio, which is your ETF portfolio, and they are being managed, they are being picked already by investment houses. So that saves you time and energy. Now, the difference here is that you at the for the past 10 years, um the ETFs have been returning 11 to 12% on average, right, of your investments. Contrary to the stock markets, why some stocks could even do 50%, some can do 100 or over 100% of returns of investment, while some can even do as low as 10% or not even do so much. You get within a year. But you are certain about this one because it's not just invested in one particular stocks, it's invested across different stocks depending the ETFs that you go for. If you go for ETF like S&P 500, that is has 500 great companies in the stock market. If you go for the one that QQQ that tracks or is invested into 100 best tech companies, yeah, in the stock market. So you have a basket, you have varieties of stocks, right? Is almost their returns are over the past 10 years have been the same with index funds. So there when you are in the stock market, you have to identify which is an index fund, which is an ETF, right? So Let me just give you little, or yeah, the similarities and little differences. That's, they are just like a twin sibling, because the returns so far for the past 10 years have been almost the same, from 11% upward on some companies or some ETFs and index fund. The both of them are just like basket of companies. They are both cheap, they are both safe. Although for some index funds, right, you have to your startup has to be from like $500 above. While in an ETF, you can buy any fraction of an ETF and continue to build on it. So that's one difference. And then for index funds, they trade once a day, while an ETF, you can buy an ETF any time of the day, right? You can buy any ETF. As far as the stock market is open, you can buy the ETF at any point of the day, right? Then for automation, the good thing about index fund is that automatically you can set up an investment, like automation, keep investing. But for ETFs, you might have to do that by yourself, like keep buying, keep reinvesting, keep buying, and all of that. So they are mostly their fees, especially for index funds, is kind of like low. For some ETFs are even lower as well. So the truth is that these are just great ways. It's just the way we have mutual fund treasury bills in Nigeria. They all give almost the same interest rates, right? Just little differences depending on the investment house that you're using to invest in any of them. So if you're investing with ARM, or you're investing with Meristem in Nigeria, right? Their fees might be different. So those are just the differences in investing in ETFs and index funds. But generally, these are great companies that you can use, or that you can start investing in and begin to build your wealth. So if you're looking at a long term, these particular systems are great for you. If you're the busy type, these particular systems are great for you. If you don't want to plunge your head to begin to study stocks, stock markets, and all of that, these particular systems are great for you to build wealth. And like I said, if you're in Nigeria, this kind of like preserve the value of your money, because you are investing in dollar assets, right? You are investing in dollar assets. Now, because we don't have much time to explain all some other little things and differences, or what ETF to pick over another ETF, I have a complete detailed course on this particular, which is stock and ETF class is dedicated to this particular one. Or our Path to Wealth Masterclass. Path to Wealth Masterclass also comprises of these investments and other investments like stocks and bonds and other investments that you can look out for. So you can just, I'm going to put a link below this to share with you how you can be part of it. The best thing about being joining the Path to Wealth Masterclass is that we have a community where you get updated information about investment opportunities, and then I also get to share like what exactly I'm investing in. With my vast knowledge on investment, I get to pick the right stocks and all of that, and also the right ETF that I'm invest, even the ones I'm not investing, but I know that could be of great help to my community members. I get to share in the community. So we'd love to have you be part of us in the Path to Wealth community. So like I said, I'm going to just find the link under to be part of us. So you could just click and be part of us in the Path to Wealth Masterclass community. We'll be so excited to have you join us. Thank you for watching. Till we see in the next video.